Your Royal Highness, Excellencies, ladies and gentlemen, it is a pleasure and privilege to welcome the more than 400 participants of this conference here in Luxembourg. I understand it's the 7th such edition. Congratulations for bringing all the specialists and decision makers in the field of insurance, reinsurance here in Luxembourg, coming from more than 30 countries. We're thrilled to have you here in Kirchberg, which is a part of the capital of Luxembourg and is in fact a place where the EU institutions are located. Maybe I should take just a minute of your attention to tell you a little bit exactly where you are. You are in the building where during 3 months in the year, in April, June and October, the EU ministers meet for the councils. That means that the Commission is here, the representatives of all the countries, the Secretariat of the EU, and they take terrible decisions or good decisions depending on the day, which also impact insurance. We are lucky to have also the Secretariat of the European Parliament here in Kirchberg. I see here a European parliamentarian whom I greet because I just got to know him a couple of days ago. And we also have the chance to have a few directorates of the Commission here in Kirchberg and the European Court of Justice, which at the very end, when everything goes wrong, they put it right again. So this is a very special place. That's where it all started back in the 50s, and what a long way we've come in Europe. In fact, for you, it is a very normal thing that you look at the Commission to solve the issues because it's a competence of the EU. Nevertheless, the countries have kept some room of maneuver and have a role to play. And as you know, Luxembourg will have the presidency of the EU starting in July for 6 months. I will have the pleasure to chair the ECOFIN ministers' meetings, and so I'll be in a position to take care of some of the issues that your president has mentioned here today in a very brilliant and also very extensive way. Now, the insurance sector is very important in Europe. It's more than 5,000 companies, and your financial reserves are, I'm told, 8,500 billion euro. That's the largest in the world, even slightly larger than the United States. I didn't double check, Dirk. I just believe what I'm being told. How would you also double check such a number? Sergio said that insurance was a little bit le mal-aimé, the unliked sector. And I think I know why. It's because you care so much for long-term, and long-term is not fashionable, isn't it? But when we really look at it, it is what we should really care about. Now, when you talk to people about their pensions, then they suddenly start to think long-term. Well, they don't act that way during their whole life because they don't save enough for their retirement, but if they really start to think about it, they agree that long-term is important. Now, I do not need to underline to you that the long term is not what politics is made of. Elections are every 4, every 5 years. So if you want to solve all that paradox, it is extremely complicated. And it is even more complicated today with the close to zero interest rates that we have, which really poses an enormous problem to insurance companies, which I'm very much aware of, my government is very much aware of. And in the very long term, it's very difficult to live with a 0% interest rate policy. So you have a key role to play to bridge that gap, and you cannot bridge it alone. So I can tell you that from the Luxembourg side, you can expect a lot of support during the 6 months of our presidency. Not only because of these long-term issues and what has just been explained in the maybe not equal treatment of insurance sector compared to others in the financial world, but also because you are a part of the solution. Now, in Luxembourg, I must tell you, insurance sector is very well known and very well recognized. It is one of the major pillars of our financial center, and we really knock on wood that it should stay one in the future, even it should grow. The success of the insurance sector in Luxembourg is due to many different factors. I'm not going to mention them all, one of which is obviously that we have a very open mentality and that we play cross-border all the time. In fact, we are by essence a cross-border financial center, and that goes also for insurance, as we are #1 in Europe for the cross-border selling of life insurance. The insurance sector has been very profitable last year. I think they made over 360 million euro profits, and this was a good vintage for the insurance sector, which means it's also a good vintage for the budget minister that I am, because they obviously have to pay some taxes on that. But they also provide thousands of jobs. They provide a lot of knowledge in a sector that is in need of transformation. So let me speak about a couple of subjects that are all linked with the EU presidency that Luxembourg will take over in a couple of weeks from now. Let me start with the EFSI, the European Fund for Strategic Investment, as it was one, and it is, one of the major initiatives of the new Commission, which is led, as you know, by former Luxembourg Prime Minister Jean-Claude Juncker, who has, together with his new team, recognized that we have a couple of problems here in the European Union that you have to solve. And one is that we are living in a period of underinvestment. And underinvestment means lack of growth. And this vicious circle has to be changed. And the EFSI, this European Fund for Strategic Investment, is one of the answers to that problem. Let me, nevertheless, before going more into the EFSI, just say that you've gathered here in Luxembourg at a time where Europe is picking up. And this is due not only to the EFSI, which is one initiative, it's due to a combination of factors, which I would like to mention because they're important and because they are confidence-building measures. Number one, we have now, I mentioned that as a first because Sergio mentioned is quantitative easing. Now, it poses some problems of liquidity and some problems to the insurance sector. But, on the other hand, this generous monetary policy is an engine of growth for Europe, and we desperately needed it. Number two, the falling oil prices have boosted the purchasing power in Europe. And all this translates already into much better growth figures for Europe. So if you add to this the initiative of the European Commission of the EFSI and also the lower level of the euro, you have a kind of cocktail which ensures that we will have much higher growth in Europe this year and also next year. And growth is also help for the insurance sector. Let me come back to European Fund for Strategic Investment. The goal is to leverage 315 billion euro, and this should be triggered by the fact that the European Commission and European Investment Bank have mobilized around 20 billion euro in their portfolio to make sure that we attract the additional money from the private sector. And I think the timing is the right one. And I think that nobody really thought hard enough on the contribution that the insurance sector can make. Now, investments in infrastructure can be a very interesting diversification for yourself, for your assets. They also have all the characteristics that you need. I mean, because in infrastructure investments, they bring regular cash flow, they have a risk-adjusted yield, and they have a very good credit quality. So if you put all that together, this is exactly the types of return on investments that you're looking for. Now, in the past, you were not really targeted, and in the past, when there were no such zero interest rates, you were not that much focused on such a possibility because there were plenty of other assets that you could invest in. So I think we have here a possible win-win situation where we could attract part of your huge reserves that you have in the insurance sector also in these infrastructure projects of the EU. And this is exactly what the leverage is all about, attracting money from the private sector. Now, I understand that calibration is an issue. That means how do you weight those infrastructure projects in your portfolio? I also understand that viability of these projects is key to you. I've understood that message, and you can count on me. I will bring that message to the EU institutions, as you have done yourself, obviously. But being in the chair, I will always have a very positive attitude towards this very, very correct and justified request on your side. This FC project and the possible role that the insurances can play in this context brings me to speak about the Capital Markets Union, which is a broad subject that the Commission has launched in spring of this year and which will mature over the next 2 or 3 years. So we will be dealing with it as a presidency on a few detailed issues. But what we must realize is that our capital market union is not yet working as it should. There is due diligence that's different from one country to another, lack of standardization, lots of other hurdles, despite the fact that we have on paper an EU single market also in financial services. So obviously, first we must make sure that there is no rollback on what is existing, but and also make sure that the situation that we have today is not used to make cross-border services more difficult than services that are offered at a national level. I mentioned at the beginning of my speech that Luxembourg is a specialist of cross-border services, and we can see on an everyday basis that sometimes offering an insurance service across the border is made more difficult or is just discouraged by partners, and we must avoid that. We've always been, as a small country, obviously, in favor of open markets, and it's open markets that has made Luxembourg successful over the years. We also think that Europe should be as open as possible towards other markets, and knowing that there's a representative of the US insurance industry, I really wonder to what extent we should use the TTIP negotiations to include also insurance services. Obviously, this subject is much wider than Luxembourg, but I think in the context that we're discussing, where we have low interest rates across the board in all developed countries, this is a subject that we should take up. So this is the Capital Markets Union and many other things in this context that I could mention, which are not directly linked with the insurance per se, but this is a subject that will dwell with us for quite a few years. Let me now come to another key milestone in the presidency, and that will be all the issues dealing with taxation and dealing with tax transparency. Now, as you might know, the EU Commission has tabled in March a proposal that would ensure an automatic exchange of information on rulings all across the European Union. Luxembourg has already voiced its support for such an initiative. In fact, we were one of the first calling for such an idea. And that will bring transparency and more clarity, and that's what we need. Now, it is maybe important to open a bracket here and speak a little bit about reforms that Luxembourg has undertaken in the field of tax transparency. Starting from the 1st of January of this year, we have implemented the automatic exchange of information on interest rates. And in doing so, we were doing what other countries have already implemented long time ago. And Luxembourg has been able to do it because we have abolished the bank secrecy back in November of last year. That was a major change to our traditions. It was announced already 2 years ago and has finally been done 6 months ago. And what do we see? Well, we see that, for example, in the insurance sector, the abolishment of the bank secrecy has not punished us, has not reduced the attractiveness of Luxembourg, as the payments in the insurance field have increased over the last couple of months. So the transparency has not been to our disadvantage, but has been an additional attractiveness. Now, we have also signed the FATCA agreement with the United States. We're going to ratify that treaty in the coming months. We have also changed our legislation in exchange of information on demand, as was requested by the OECD, and a new assessment on Luxembourg is underway. And last but not least, and that has a direct impact also on the insurance sector, starting from the 1st of January 2017, Luxembourg will be an early implementer with other countries of automatic exchange of information, also on insurance premiums that are paid. So you see, we are moving quite quickly in the field of transparency in Luxembourg, and this goes in parallel with the moves of tax transparency which are happening at EU level. And I've promised the European Commission that we will do our utmost as a presidency to make sure that we have a final agreement on this directive on automatic exchange of rulings before the end of this year. Another huge subject in the presidency will be tax basis discussion, as the EU Commission wants to table a new proposal for the common consolidated corporate tax base initiative that it launched 3 years ago. And we will carefully observe what the Commission is going to announce, and obviously take that on board to have a discussion on many subjects we deal with the tax basis, which brings us closer to a harmonization, be it on effective tax rate, question mark, or be it on minimum tax, question mark, or whatever the approach of the Commission will be. Key is also, nevertheless, we should never forget in Europe that we are part of a global economy, and that whatever steps we take, we must make sure that we're not alone out there, and that the initiatives we take are in line, or if not in line, preceding, but not too much, what others do, and I think especially of the United States and other larger Asian economies. So the goal must be to have a level playing field. Otherwise, the European Union will be outpaced by others, or make the attractiveness of its own market less interesting. So, in fact, level playing field, the word has been now used. That is exactly what the initiative of the OECD called BEPS, BEPS being an acronym standing for Base Erosion Profit Shifting, has had as a goal. Luxembourg is following the 15 working groups very closely. Action group number 7 is dealing specifically with insurance, and we're very active also in that one. We are not amongst the countries who think that a mere negotiation of an insurance contract should mean that would be a permanent taxable establishment. The discussion is still going on, and as I said, we are very much following it, because we are an important player in cross-border insurance. The work of the OECD BEPS is going to be finished in autumn, and we will have in the presidency the opportunity to see how the EU can translate this bulk of suggestions into EU directives. Before concluding, I would like to highlight one aspect that maybe is not totally on your radar, but is very interesting, and that is what I've called fintech. Fintech meaning the place where finance meets technology. And we've done a survey in Luxembourg over the last year of what role fintech plays in our financial center, and found that we have more than 150 companies that are active in that field, and they are key players in changing the financial services as we know them. And interestingly, if you translate that into the world of insurance, you will see that most of your products that you sell are still driven by people-to-people relations. And it's probably very good that way, because you want to convince your counterpart, and you need to do that individually. So I think that the digitalization of the insurance customership is only in the beginning. And I think this is a subject that we could definitely discuss more together, but it would also be interesting to see in which way Luxembourg can be a pioneer in implementing fintech for the insurance business. As a conclusion, I would like to say two things. One, it's probably not going to surprise you. The other one, maybe a little bit more. The first one was mentioned by your chairman. This is the role that private insurance will have to play in the future in ensuring that our generations have a decent retirement scheme. The Social Security-based pensions obviously are pretty fine, and in countries like mine and in Europe, very generous. But we know that in the long term, we will meet lots of hurdles to make sure that this system can be financed. And the private sector is probably one way to solve the equation, which otherwise becomes very difficult to solve. So we all need to look into how we can attract more contribution from the private sector into private insurance to help us solve this difficult issue, which is mentioned in all international reports for most of our countries. The second item is, in fact, about the role of insurance in general. You make us look at the world the way it is by calculating probability, likelihood, and measuring risks. How lucky we are to be today in Luxembourg, in a country that has peace, serenity, and not far from us, at the borders of Europe, there is war. And even in countries where there's war and uncertainty, you need insurance, because you want to attract investments there to rebuild those countries. You need to measure how you can take the risk to be there. And for that also, you need the capabilities of insurances. So let's rejoice in being in a country of peace, but let's not forget those that are not that lucky. Thank you very much.